First episode of Foliko Live. I am Travis Nixon, career data scientist, joined by Tyler Tucci, former hedge fund PM, current head of research for Cinerai. First thing I want to lead out with, we launched Foliko Live or Lite last week, and we've been anxiously watching the dashboards to see how many people have been able to, alongside us, enjoy what this product has to bring out for y'all. A huge thank you. This has been incredible. Today alone, we have 2,200 people on Foliko Lite. We never would have imagined that we'd be over 2,000 people using the product alongside us right now. This is just absolutely amazing. We appreciate all the questions, all the comments, all the suggestions on how to keep on going, pushing the limit, getting better, going further. And building up this community has been a dream of ours ever since we started building the product and gathering the data. So thank you so much for coming along with us on this journey. We're looking forward to continuing to bring you even better features, even better analysis every day. And so with that comes our special evening broadcast of Foliko Live tonight. We've been able to take a look at the market as it's been unfolding. If you'll recall last week, our models were saying that the market was still struggling last week, coming out into something, angling a little bit better for today. As of today, our risk on, risk off models are still saying slightly off. We'll see if they come out risk on tomorrow. Tyler, what's the market looking like today?
Yeah, we had a nice green day. The indices finished up nicely. ARC up about 2.5%. Triple Q's up over 1. The S&P back above 4,100. So very interesting setup here into CPI tomorrow. We'll see what happens. That's going to be one of I think the next things that we start to show in Foliko. I don't know if we'll give it away in Lite, but we'll start to do some analysis on CPI and start to do our own forecasting. We don't have our own forecast at the moment, so I'm not going to make any calls. I am going to opine that it seems that the market is set up looking for some kind of positive news, i.e. lower inflation prints. Somebody whose research I was reading today said, inflation's going to be lower tomorrow, X all the stuff you actually buy. So I kind of thought that's interesting because he's not wrong. For example, gas, natural gas will be down. Some of the other energy related things will be lower. But we'll see the actual stuff that's a high frequency purchase. My argument against, for example, when people say, oh, look at, used cars peaked 6 months ago in terms of prices, yeah, but how many used cars you bought in the last year? What I'm more curious in, how much am I paying for, chicken each week? What does that look like? What do my high frequency purchases look like? Because those are the things that increase or shrink a consumer's budget. Not the one-time purchases, necessarily. Although they do have an impact, but when I'm thinking about a clean look, I think about it more that way. And it'll be interesting because after the Jackson Hole dump, we've seen pretty much nothing but bullish impetus from equities, despite the fact that Powell just got up there and swore to God he'd hike until he hurt you. So we'll definitely, I'm fascinated to see what happens tomorrow. I bought some calls, EWZ weeklies, which is the Brazil ETF. I just think from a risk reward standpoint, if the data, if for example we get a negative month over month print, I think the negative dollar sensitive assets, i.e. dollar lower, these higher, should do quite well. And that's pretty much, that's the new one trade for the market. Recently, I've been talking about the 2023 December Eurodollar curve as being the one trade in the market. Basically, you get that right, you get everything else right. Now it's the dollar.
We got a question for you, Tyler. Yeah, Howard Swing Trader, he's coming out. He's asking, is there a high frequency, low frequency CPI equivalent number? Could be interesting.
So you can go to, oh boy, it's been a long time, but several of the Fed websites, like the regional Fed websites, I don't think, it's not St. Louis, there's Cleveland, it's like Cleveland or Kansas City have their own inflation nowcasts, where they take all the recent data and they nowcast, whatever they think it's going to be going up to the event. So yes, you can view this on, several of the Fed websites. They do a good job putting together this data set. So that's something I would look at if I'm trying to, figure out how other data has moved inflation. That would be the way I would do that. But some of those can be a bit whipsawy. That's why you want to have the right combination of periodicity, because just like a 1 minute chart will fluctuate much more than a 1 day chart. Kind of same thing here. So you're always trying to find a good balance. But yes, I believe if you Google Fed inflation nowcast or Fed CPI nowcast, I believe it'll take you to the right central bank website where you can view that data.
So CPI, we'll see tomorrow. I wanted to ask you something. So I was reading Wall Street Journal today. They were saying that there was more downward revisions for earnings estimates this quarter, for this quarter coming up, than since 2020.
I haven't seen that specific, but yes, I believe that, we had reached recently like an analyst downgrade number. Yeah. So things like that are starting to happen where, the expectations are coming down significantly finally.
So does that mean that we're set to rocket up?
I mean, that's usually how that works. That's how equities have worked in, the last decade for me, is basically they figure out how to get everyone out of their position. And then it's like, the ride of the headless horseman, whereby equities rally 20% and nobody owns a thing. So yeah, that, we've seen that time and time and time again. So that's a very, very possible outcome. I think, some in markets might argue that that's kind of the modal outcome, or the median outcome at this point.
Now it'll be interesting to see though if employment ever takes the hit. So employment is the number that I like to watch a lot, because that's going to have so many downstream effects, right? But why is it staying so high or so low unemployment, but employment level is so high? I think it'll be interesting to see over the next quarter if that actually finally starts to come out. I think we're seeing more and more companies coming out and saying layoffs, taking some workers out, taking some pressure out of it, everything like that. So I think that's going to be an interesting number to watch. What are you looking for tomorrow specifically? What is the CPI print that would tell you it's going to be a good quarter coming up?
Well, that's the problem. I can't simplify it down to, for example, if we get a negative month over month print, that's what I think equity bulls need on a sustainable basis. Because that means we could actually be appreciably on our way back lower. Goldman announced layoffs. Yes. I think everybody is tightening belts, especially given what's going on in tech. I think that's kind of hit, because tech is not just the tech side. Tech was a huge pipeline for the banks as all this stuff was growing. I mean, the IPO pipeline is pretty much dead. So that's a huge thing.
Goldman announced, right?
I mean, that's certainly one of the reasons that's not helpful. I mean, to justify employing a whole floor of bankers, you need to do banking. So if there's nobody to be banked, then, you send a lot of those people home. Which I think, just as an aside, like economics is so cool. It all like, the bust in Silicon Valley hits, banks, because banks have been right. Like I just find this very interesting, and this is why we're here, right? Because this is fun.
With full sympathy to any of those that do face layoffs. Could be anybody out there. It's a terrible event, but at the same time, if you can have the data there, start to predict it, start to understand the forces that are going on there, very, very helpful. Make some money on the side on the market while anything like that is happening. So look, today's episode of Foliko Live, we wanted to keep it short and sweet. We wanted to really come in, announce some things happening with the market over the next couple of days. Tyler, are there any specific tickers or forces that you're looking at right now? I think the natural gas trade that you had last week was just phenomenal. I'm hungry for something more.
Yeah, so my best idea has been that the EWZ calls. A bad idea that's a lot of fun I'm long puts on the 3 times levered natural gas ETF. Because that moves very fast, obviously very unstable. Do not try this at home. This is like when the mascots at halftime of the basketball games try to dunk from half court off the trampoline, right? Like, I know what I'm doing. This is one of those do what I say, not what I do kind of things. So I am looking at that one just from a risk reward standpoint seemed like a really, really good one, because that one can go really, really quick if you get it right. So just from a risk reward standpoint, it's a good trade. We'll see ex post if it is actually a good trade, but in terms of a risk reward setup, this is what I like. I will just real quick, because we didn't do an earnings show this morning, I just thought I'd bring something to your attention. So Adobe reports, I believe, in 2 days.
And by the way, why didn't we do an earnings show this morning? Because there's like hardly anyone releasing earnings this week. Adobe's a big name, but there was like 10.
Right. This is with all due respect, you guys don't care about any of these names on this list. Like I try to do my best to make sure that if a name reports that you all care on, we will always cover it. Just not a whole lot of these names this week, but I like to show Foliko in action because I want the people in Foliko Light to have don't do exactly what I do with this necessarily, but I want to provide you a framework within to work. I think that's important. So things like this. So we can observe the 10-week health factor, earnings power health factor. That's an interesting story. In terms of, does it set up one of my divergence trades? Yeah, a bit. A bit. The stock's pretty depressed off some, I think it was a $500 stock not so long ago. Heck, it was a $700 stock not that long ago. So it's come a long way. We've taken almost 50% out of this bad boy. But I do think things are interesting like that. That's not good. I mean, do you have any, as someone who is somewhat adjacent to this kind of business, do you have any view on what happened there?
So actually, my 2 cents, Adobe's been faring fairly well in the tech sector. Like, look at that coming in from mid-March to now. It followed all the other right tech stocks that came out halfway June to midway August. Did awesome there. It gave it all back coming into September, but Adobe actually hasn't been affected as much as some of the other tech names like your Snap or even your Meta, which didn't get the June and July rallies in it. It's just been flat since June. But I think that we're going into a question of, is Adobe actually justifying it faring okay right here? And I think that's a very valid question. If you look at that downward trajectory earnings power score, that's exactly what you don't want to see. Holy hell, that's what you don't want to see. And I think it's settling back into a new norm. So yeah, as far as the divergence, I actually do like that as a trade. I'm going to probably add that into my portfolio personally.
Okay. Yeah. Okay. I mean, and that's something that's very interesting to me. I mean, in terms of technical location, all right, let's take a journey. In terms of technical location, pretty good, actually. In terms of like, is this a level I want to short? Actually, a pretty interesting one. The perfect short would be against the 200-day moving average up here at 450. So that would be one of the things that when I talk about conviction, like that's just kind of in no man's land at the moment. It could very well, bull flag or bear flag and roll over, but there's some other things going on that are a bit more constructive. When in doubt, zoom out. So that's interesting. That's just under the 200-week moving average, and that is actually not. That's not. You don't want to see that. We want to see if you're an Adobe long, you want to see that back over like 422 suite, like quickly. Otherwise, these are the kind of companies I look to attack, because that looks a whole lot like that, right? So we had this, and one's daily and one's weekly, but markets are fractal. So you can get one of these. Is there a zoom button? But anywhere you see where I'm highlighting this push off the 200-day moving average, you could kind of see something similar like that. And that's the concern. That's what I would be looking for if I was setting up an Adobe short. I'm going to say I'm probably not, at least until after CPI. And that's what I would recommend, is if you're looking for, to enter short exposure on Adobe, you probably hope for a pop on CPI and sell that. That's probably the most prudent thing to do. I don't know about, if we have an ugly print, I don't know about selling in the hole in earnings. That doesn't seem like the best idea. Let's see. How are these? I mean, these options, they do have some decent juice to them. I mean, the 390 put, I see about for $9 here. So you'd have to get the price below 381 to start, before you started seeing any profit above break even. Not to say we can't, but those are the things you start to think about, is, when you're thinking about your range of outcomes, can you see a scenario where it goes to 375? You need it in order to be entering the short exposure.
Question for you. So speaking on Adobe, they're a company that operates without borders. Their software works just as well overseas as it does domestically, which means they're making a lot of their revenue overseas and counting that as just doing business. The dollar's strength is really going to crush a lot of those profits from overseas.
You would think.
And we've got Microsoft really hurting from that. They've come out and talked about the exchange rates and everything like that. I don't know why they're the only cloud company that says they're hurt by exchange rates, but whatever. Adobe claims to be a cloud company in several of its products with the Creative Cloud, but it's not really. It's a software products company. And so they're just going to get hammered by things happening overseas. Could we see any exchange rate relief coming off of that, coming up for a lot of these software companies?
It's a very valid question. And the thought is, hopefully, I mean, and that's kind of the key to everything here. Is the dollar taking its foot off of all of our throats in terms of a risk standpoint? Because that is acting definitely as a drag here.
Adobe is one of those that is highly connected abroad.
Yes. And it's interesting, right? Because when I think about the Adobe product suite, all I think of is, documents I've signed, really. So are they justifying their
PDFs?
Right? No, that's what I mean. Like that's a whole, right?
Like make it really hard to do anything productive unless you pay $800 a month or something like that.
But that's it. I mean, that's the question, is does that?
No, they make the world's best creative tools. Absolutely incredible. If you're not on, all of our graphics. This thing right there, that was built in Adobe. Top right hand corner, right over your head.
That's hilarious. I'm such a boomer. It's incredible.
But all that kind of stuff is going to be hurting, especially as they have subscription services where in a lot of countries they denominate in the dollar. So your subscription service is like doubling in price. So
that's interesting. I didn't realize that they did. Okay. So, I mean, that's a microcosm for the whole world right now, is you're living in a country that has nothing to do with the dollar and you're getting absolutely squeezed by the dollar. So I wasn't aware that they did dollar subscription in non-dollar countries. That's very interesting. That's painful as heck.
I'm sure in some countries they are taking it, but from my understanding, like the people that built that logo, they couldn't buy it in their local currency. They bought in dollars. and they're certainly not taking rubles. So,
right. Very interesting. Very interesting. All right. Well, I was today years old when I learned that Adobe is not just a PDF company.
Well, I think we better close it out here. We are going to provide some Foliko Lite links for you for Adobe in the comment section below. So please go ahead, go in, check it out, make up your own mind. Let us know if you see something interesting. We're always exploring new ways to look at the data, some really interesting opportunities in the reputation and competition score. So let us know what you think in the comment section below. And we'll be back here soon. I'm under the knife tomorrow, so we might not have an episode tomorrow. It may be the Tyler show tomorrow, but at the very least, we'll be back Wednesday. So thank you all, and we'll see you again soon.